Accounting 10A, break-even, contribution margin, and cost of goods sold. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page and our LinkedIn group, MBA Accounting and Finance. And the reference for this question is a great question from this accounting book, the 12th edition, and here's where the question is located, and let me expand it because this is one of the better questions I've seen on management accounting, period. So we are given in the question these balances, and it's also pointed out that there is no ending or beginning inventory that we have to deal with. And what we're asked to do is to compute a variety of balances: variable selling and admin, contribution margin in dollars, variable manufacturing, break-even point in sales, and cost of sales. So like a lot of accounting questions, it's a puzzle. And it took me a little while to figure out the best way to solve the puzzle. So what I started with was, well, maybe I can solve for total manufacturing overhead, both fixed and variable. So they gave me sales. And by the way, I used the formula that sales less cost of sales is gross margin. So they gave me sales. I knew direct material and labor. I did not know the total variable and manufacturing overhead. I knew one of the pieces but not both. Equals gross margin. Now in the question we're given gross margin of $20,000. This math, the sum of these numbers gives us 40,000, so I knew 20,000 was missing, and what I've written down here is that additional 20,000 expense to lower this number to 20,000 must be the fixed and variable manufacturing overhead cost. So I did that. And so the result is if I plug in that 20,000 for fixed and variable manufacturing overhead, I get sales less cost of sales equals the gross margin that we're given in the problem. So I know this total now. I had this as step 1, but actually you could think about this as step 2 instead, and that is set up the income statement. So I've got sales less all my variable costs, and you'll see that we've got selling and admin, manufacturing overhead, labor and materials, some of which we know, and that sales less variable costs we know gives us contribution margin. And if I subtract fixed cost from contribution margin, I get net profit, or in this case my net loss. So I set that up. Then I said, well, if I know variable manufacturing overhead is 20,000, and I was given in the question the fixed manufacturing overhead, I know that whatever's left, 20,000 minus 15,000, that 5,000 must be my variable manufacturing overhead. And so I can post that into the statement below. So again, my income statement, if you will, is now getting added onto. I can plug in the variable manufacturing costs that I just found in step 3 up here. And now that that's set up, I can find my selling and admin costs, because the only number that's missing in this flow, in this income statement flow, is the variable selling and administrative. So I put in bold here, I plugged the amounts, so I ended up with a net loss of $5,000 that I was given in the question. Plug amounts so that net loss equals 5,000, which is given. So by process of elimination, my variable selling and admin had to be 15,000. So now I know all my costs. So I can go to step 5 and compute contribution margin. Sales less material, labor, variable overhead, variable selling and admin gets me my contribution margin. These two amounts we already saw above, how we calculated them. So I get my contribution margin in dollars, 20,000. Step 6, I can get my break even in sales dollars. So I'm solving for sales. This 80,000 is my variable cost. I have, if I go back up a little bit to step 4, 25,000 in fixed costs. That gets plugged in at the bottom. So I know that my variable costs and fixed costs total $105,000, so my sales to break even to create a profit of 0 is $105,000. So my break even in sales dollars is $105,000. And the last step is a little variation. My manufacturing cost of goods sold is simply my variable cost of $80,000 that I found up here, my fixed cost of $25,000 that we already talked about here, and so I get my manufacturing cost of $125,000. So what I've done is I've solved for all these variables, and the way I did it was I used the gross margin formula to solve for the variable manufacturing overhead in total. I set up this income statement, leaving the two variable amounts blank for the moment. Since I knew fixed manufacturing overhead and total manufacturing overhead, I solved for variable manufacturing overhead. Once I plugged in variable manufacturing, I knew the only number that was missing was variable selling and admin. I plugged that amount so that the sum of the revenue and expenses would get me to a $5,000 net loss. I used the sales I was given and all my variable expenses to get my contribution margin, $20,000. Now that I had all my costs, I could add my fixed and variable cost and figure the sales amount that would create a break even of 0. And finally I could add up all my variable and fixed costs to get cost of sales. Great question from that textbook. That's it for Management Accounting A. To get video textbooks, which I've relabeled on the site, you can get 30-minute to an hour videos recorded by accounting topic. You can go to the website to see details on that. We offer spreadsheet templates for almost all of our YouTube videos, and for one-on-one tutoring, here's the email address and the phone number. Thanks very much, and we'll see you next time.